Good morning and welcome to the Atlantic Council. I'm Jenna Ben-Yehuda, Executive Vice President here at the Council, and it's a true pleasure to welcome you to today's Atlantic Council front page conversation with the Chair and CEO of NASDAQ, Adena Friedman. Before we dive into today's program, I want to take a moment to reflect on what has been a truly dynamic week of programming at the Atlantic Council around the IMF World Bank spring meetings, both here at the Council and live from our on-site studio inside the IMF and World Bank. We've hosted a wide range of timely, high-level discussions on everything from the future of the dollar, climate change, and Ukraine's resilience and reconstruction. This breadth and depth of conversation speaks really directly to the mission of our Geoeconomic Center, to illuminate the intersection of economics, finance, technology, geopolitics, and foreign policy. Our goal is to bridge the divide between these often siloed worlds and to help shape a more resilient, inclusive, and secure global economic system. That mission really comes to life through the work of the Geoeconomic Center's Economic Statecraft Initiative, host of today's event, which is grounded in the belief that economic policy is a vital tool of national security and global influence. Today, we live in an era where economic tools such as sanctions, export controls, tariffs, and investment screening are increasingly used as instruments of strategic power. At the same time, we're undergoing a true technological revolution driven by artificial intelligence and digital currencies. And these advancements are not only transforming the economic landscape, but also enabling new and complex forms of financial crime that demand updated approaches and vigilance. And so in this rapidly evolving environment, the role of the private sector has never been more critical. As these economic tools evolve, so too does the responsibility of institutions like NASDAQ to help address challenges of trust, resilience, and systemic risk. NASDAQ is really a prime example of how the financial sector is shaping the infrastructure and technology that underpin global economic stability, demonstrating how industry can adapt and lead amidst complexity and a lot of change. So following a thoughtful conversation with Adena at last year's Transatlantic Forum on Geoeconomics in New York, we are thrilled to welcome her back to the Atlantic Council. Welcome, Adena.
Thank you.
She has served as Chief Executive Officer of NASDAQ since January 2017 and became Chair of the Board of Directors in January 2023. She brings more than 2 decades of leadership and deep industry expertise and is widely credited with leading NASDAQ's transformation into a global technology company that supports the architecture of modern finance. She's also a Taekwondo black belt, excellent training for today's fight in the rough and tumble world of global finance. Today's conversation is really going to explore, Kim, we're so delighted to have you leading this, to really talk about how NASDAQ is navigating this rapidly evolving environment that is shaped by current market dynamics, broader economic trends, and transformative technologies. We'll look at how financial institutions are responding to rising expectations, to prevent these kinds of disruptions, to maintain transparency, and really to ensure market functionality in this increasingly volatile geopolitical landscape, while also striking just the right balance between competition and collaboration, when industry must come together around shared standards and when innovation thrives through healthy competition. With that, it's really my pleasure to turn things over to Adena Friedman and moderator and leader of our Economic Statecraft Initiative, Kim Donovan, as they begin their fireside. Thank you.
Thank you, Jenna. Well, Adena, welcome to the Atlantic Council, and thank you so much for being here with us today, and thank you all for joining us in person as well. As Jenna said, it's been a very busy week in Washington with IMF and World Bank spring meetings, and we've had the opportunity to hear from foreign finance ministers and central bank governors and other leaders within the financial system on the current economic climate. And I know while the focus of our conversation today is really more geared towards technology and how it's shaping the future of the financial system, I feel I'd be remiss if I didn't ask the CEO of one of the leading market operators just how have the markets been responding to the recent volatility over the past few weeks, and what advice would you have to other CEOs on how to navigate this space?
Well, I think first it's important to understand that it is a very, very dynamic time for investors. I always try to put myself in the head of an investor when you go through these periods of uncertainty and change. And if you're an investor right now, you're having to recognize that there is a level of uncertainty that's been brought into the economy. And right now, if you're in that mode, you're going to take a risk-off stance. You're going to say, okay, I'm going to take my money, put it onto the sidelines. I'm going to try to understand what is known, what is not known, what's knowable and what's not knowable. And then I'll redeploy my capital carefully as I think about what are the true impacts based on all the changes that are happening. And we saw that, of course, at the beginning of COVID as well. And I think COVID is a good kind of example of how investors, frankly, had a very difficult moment and realizing they really had no idea what was going to happen at the beginning of the pandemic. So you saw a big drawdown of capital. But very quickly, with changes in monetary policy, and very quickly when people realized we could actually operate the world pretty successfully in a remote setting, and that actually a lot of things were going to continue to operate relatively normally, and there are other things that are going to be highly disrupted, they were able to bring their capital back in a smart way and redeploy. So I think we're going through a moment right now. There's a lot of change. There's a lot that's unknowable, and therefore they're taking risk off. Now, in terms of how the markets have responded, market operators, the system has been remarkably resilient, and I'm very proud of that for NASDAQ, but I'm proud of that for the entire industry. We have spent years and years working together as an industry, both the operators, the regulators, participants, to make sure we have a lot of resilience. We have a massive amount of capacity, both capital capacity, but also technology capacity to handle these types of market shocks. And as you can see, the system itself has worked quite well, even with a lot of change and a lot of volumes. Just one example, just really quickly. So, if we look at the beginning of April, first 10 days of April, we've had 5 of the top 6 trading days in equities ever in the United States. We've had 4 of the 6 top options trading days ever in the United States. And yet, all of the entire industry has operated, and you haven't heard anything. Now, when you don't hear anything, that's really good news in our market world. But one of the day, that the peak day in April 7th, we had 550 billion messages flowing through our systems in that day, just to be able to manage the level of demand and supply and demand, of course, that was coming into the markets. So I just want you to understand how the plumbing has been working, how effective we've been through the many, many years of investment that the entire industry has made.
That's really impressive. 550 billion.
I know. Even I think that, we talked about this at Investor Day last year, where that number was kind of a peak number was 200 billion. So we've seen more than a doubling of that number, just in the first 10 days of April.
That's amazing. And I know, just to stay on this area, and I know NASDAQ just recently published some analysis on where they think long-term outlook for IPOs is going. So I was wondering if you could talk a little bit about that and if the outlook has changed at all.
Yeah, so we have something called the NASDAQ Pulse Index, yes, where we talk about, what's the sentiment, what are all the drivers of decisions on IPOs? And I think our economic research department worked with our markets division to really think about what are the key ingredients that make it so that the market's inviting to IPOs, and whether or not we're likely to see more IPOs. And right now, that sentiment has changed a bit, for good reason. The volatility in the markets, and as I said, you put yourself into the head of an investor, and you're saying, okay, there's a lot that's unknowable. If you think about IPOs, they're one of the riskier things that they can invest in because they don't have the history and knowledge of the company to the same degree they do of a public company. So it's very hard for them to underwrite risk at the moment in something new. Therefore, a lot of companies that are ready to go, we have a great pipeline of really strong companies that are looking to go out. A lot of companies that are saying, you know what, I think I'll wait until the environment is more inviting so that I can maximize the value for my earlier shareholders and enter the markets in an inviting time.
That makes a lot of sense. And you kind of along those lines too, I know a lot of people are very familiar with NASDAQ as a market operator and stock exchange. But I mean, as we've seen, it's much more than that. And so I was wondering if you could talk with us about how NASDAQ's role in the global financial system has evolved beyond an exchange and really into more of a technology company.
Yeah, thank you. So when we think of our role as a market operator, we ground ourselves on three key pillars. We provide liquidity that really fuels the economy. We provide transparency to allow investors to make informed decisions, and we really provide integrity to make sure that there's fairness and that there's just a general sense of fairness and protection within the system. And as we decided to broaden and expand what we do as a business, we talked to our clients, corporate clients, investors, market participants, exchanges, other exchanges, and said, how can we make sure we're taking all of our technology assets, we're taking all of our expertise, and we're applying it in those three key themes to help the industry navigate all the complexities of the financial system more successfully. So we ended up with three key pillars that now underpin NASDAQ from a technology perspective. So we have what we call our liquidity technology. So we provide technology for 130 markets around the world. So 130 markets really use our technology to power their markets. We also provide technology to hundreds of banks that underpin their trade infrastructure. All the risk management and trade life cycle that they have to manage for hundreds of broker-dealers around the world. And then in the transparency pillar, we really focus on data analytics, ways to make the markets much more transparent. We have our index business. That continues to be a great grower for us. We have about about $620 billion of assets under management in our index business, very transparent index products. But also we provide analytics and market data to help corporates and investors connect better. And then in the integrity pillar, we have our anti-financial crime technology, which Kim has some background in that. So we're looking forward to speaking more about that. And we also have regulatory reporting technology and surveillance technology that really underpins the integrity of the entire financial system.
And that really leads me to my next question, because NASDAQ has so much insight into the financial system. And so with that in mind, from your perspective, what are some of the greatest challenges and risks that the global financial system is facing today?
Yeah, well, one risk that I think is just at the top of that list is, of course, the anti-financial crime. So, there is a study that we did recently that showed that there's $3 trillion of money that has been illicitly flowing through the system in terms of being money laundering. And then there's another $500 billion that's lost in fraud. So those numbers are so big, they're hard to really kind of get into your head. But it is a global issue, and it requires global solutions. It's also a collective issue that requires collective solutions, meaning the banks are being put on the front lines to help solve this problem, but they can't do it alone, and they can't do it individually, they can't do it just as an industry, and they really have to rely on the public sector and the private sector and the technology sector to really come together to solve this problem. So almost 5 years ago now, we bought a company called Verafin that is a leading provider of technology and one of the things that's really special about Verafin is that it started early in adapting to cloud. It's a cloud native solution, but it also got permission by the US government to bring bank data together in a consortium data lake to allow us to be much smarter in looking at patterns and practices of criminal behavior, applying topologies that are very specific to different criminal activity, and being able to look at payor and payee. And as you know, that's very, very important. Being able to look at both ends of the transaction. That allows us to be smarter, actually, frankly, at lowering the number of false positives. Because it's a little bit of looking for a needle in a haystack. We process 1 billion transactions a week. So you're looking at a needle in a haystack of which are legitimate, which are not. How do we prevent them? How do we also report them properly? And it's a huge exercise. So we provide very advanced AI that's looking to try to identify the actors, and then we provide a lot of automation to automate the workflows. Because again, also, just as the government has just a massive amount of activity that they're trying to process through with limited resources, so do the banks. So we're really trying to make it a more efficient exercise by automating a lot of those workflows. The key, though, to success is the feedback loop, right? So you get the banks to identify potential actors, you get them to write to the regulator and say, we think this is a bad actor. The regulator then or the law enforcement starts to investigate that actor. Well, if it turns out that there's criminal behavior or not, frankly, it would be really nice to get better feedback loops, because then we can make our models smarter, we can make the banks better at it, and then we send fewer false positives to the regulators, and they can really focus on the right things. The second thing is, of course, allowing the banks and law enforcement and regulators to use the best technology available, and of course, cloud and AI are the future of technology, and allowing the banks to have the freedom to use those technologies is going to be important, because of course the criminals are going to use it to the best of its ability.
Absolutely, and that's where we're seeing them kind of almost get out ahead of us in certain situations.
Yeah, and it's amazing how, unfortunately, how sophisticated the criminals can be in trying to, find a very vulnerable person or and hoodwink them into basically stealing their money. Or they can use criminal networks, child trafficking, human trafficking, terrorist networks. I mean, really, the worst of those criminal actors can come into the system and use very advanced ways to manage their money through the system. And we have to be just as advanced at stopping that. And so that's why it's such an important problem to solve. But we're just so pleased to have this important role now in helping solve such a big problem.
And because traditionally the financial as well as technology sectors are hyper competitive. But this space, as you've said before, it's a big problem. We kind of have to solve this together. So are there opportunities for collaboration in this space, and how would we get there?
Yeah, I'm glad you brought up that issue of competition and collaboration. Just in markets, so in markets, we compete vigorously with other markets, obviously. We compete for every order that comes into our market. We compete for every company that lists on our market. And so the competition is pretty active, or more than pretty active, extremely active. However, we are all stewards to the integrity and the resiliency of the system. So we work collaboratively with our peer competitors, our peer exchanges, and with the regulators to make sure that we build the core underpinnings of the financial system to work as best as it possibly can. We talk together about how we can actually back each other up systematically. We talk a lot about how we make sure that orders get brought across the system seamlessly. We talk a lot about that integrity. We look at bringing the data back together so that we can look for, we use our surveillance systems, but so does the SEC, in terms of bringing all the data into a common format so that we can find bad actors inside the markets. So in the same vein as that, the banks, I think, historically have thought, well, if I'm better at managing fraud, I might get more customers. And that is probably true. I would hope it's true. But it doesn't have to be, I'm going to compete on that basis. I think that the banks have really come to realize this is a collective problem, and it requires collective action. And so it has changed. The attitudes of the banks have really, really changed in the last decade to say this problem is bigger than me, and I've got to be able to work together to find ways to make sure that we solve this problem more effectively. So it has been a sea change, and that's why the data consortia, they're more willing to work with technology providers like ours. We've been moving up market into the tier 2 and tier 1 banks. They've been embracing us. We now have $10 trillion of assets, banks that represent $10 trillion of assets involved in our consortia data lake to make sure that we solve this problem better. Now it's a matter of also working with FinCEN and FinTrack and other regulators. They're ready also to have more of a feedback loop. Law enforcement, I would say that the FBI has gotten much better at working with the banks to give feedback and try to work collaboratively on the large cases. And our technology is definitely becoming more and more important in that context, but it also requires multiple legs of action across multiple technology providers.
Absolutely, and it's just been so interesting, especially coming out of FinCEN. The value of financial information is so critical to be able to stop this financial crime, terrorist financing. You listed out several different typologies and threats in the system right now. And again, on the FinCEN side, and this is true for FinTrack and every other financial intelligence unit, there's just so much information.
Yeah.
And just being able to get through that, to identify those needles in the haystack can be very challenging. And so it's really refreshing to hear that there are solutions to these bigger problems and that there's actually an opportunity for collaboration. But recognizing that these are still very there's a lot of challenge here. So I was wondering if you have any thoughts on if there's ways that we can effectively develop different frameworks that can balance a healthy competition as well as this necessary collaboration you've discussed.
Well, I think first, this is not a national problem. This is a global problem.
That's key.
So thinking about with regulators and law enforcement, I know it's hard. We actually, national security is paramount to the role of a regulator and a law enforcement agency. However, if we think about the criminals, they don't care about borders. They're working all over the world to try to perpetrate their crimes. So in this narrow area, are there ways for regulators and law enforcement to share more information when it comes to making sure that the banks are better equipped to understand what kind of criminal behaviors, how they're changing, maybe looking at entities that we should be looking at collectively across multiple jurisdictions, creating a better feedback loop. One of the concerns I've heard in the past is that banks that are not U.S.-based banks but operate in the United States don't get the same access to the feedback loop from FinCEN and from law enforcement. They just don't, because they're not entities that are based here in the United States. So how do we break some of that down and allow them to be as effective as everyone else in solving this problem together? Those are all things that I think are very doable. It takes the will of working together across jurisdictions. So that's one. I think the second is really unleashing the power of AI. In the past, the banks have had I think there's been kind of a single lens at looking at AI by the regulators of saying, well, this is a technology that's new and different, and it can be used for good purposes. It can be used for not so good purposes. The potential for bias to come into lending decisions has been the most common example of that. However, in the world of let's really solve crime, we've got to be able to unleash the technology to the best of its ability, because I can tell you that criminals, they're going to use it to the best of its ability. And it is remarkable at how advanced that technology can be. But I think that there's a lot of opportunity for the banks to get even better at what they do by using that technology more effectively.
That's great. And I know you've already kind of touched on this, but is that, is AI kind of where NASDAQ is really focused in terms of your technology investments?
Yeah, it's cloud and AI. So I would say over the last 15 years, we've done enormous amounts of work to develop all of our solutions as cloud-first solutions, including our markets. So we've been moving our markets into cloud infrastructure now for 4 years. We had already moved all what we call the surrounding systems, meaning as soon as the trade occurs, all of the data goes into a public cloud infrastructure and allows us to analyze it for market ops, for market surveillance. All of those things are done in cloud. But the matching of the trades themselves are so hyper low latency, so, as I said, so many messages, that we've always had to contain that within our infrastructure. But 4 years ago, we launched a partnership with AWS to actually bring cloud infrastructure into our data center, create a hybrid cloud model where they are able to give us instant scalability, resilience, modern data management, all the great things that cloud has, but with this very hyper low latency, very hyper scaled capability. So we're doing that in markets. We've just expanded our partnership with AWS now to really deploy that in markets all over the world, to have kind of packaged infrastructure and software together to make it so we can modernize markets around the world. And now, of course, that allows every market to unleash the power of AI. Because if you're not in a modern data management mode and you're not using cloud to begin with, it's very hard to deploy AI. So we're now in the mode of definitely deploying AI across anti-financial crime, risk management. We have a new risk management module within our Calypso platform that is really using AI to be much faster and much better at providing risk management, which in a time of this market turmoil is critically important. And then we actually have AI order types now in our markets themselves, so that we can really deploy the power of this technology to make for a better investor experience.
That's fantastic. I hope that there's opportunity within, especially the U.S. government, but also within our foreign partners' governments, to be able to harness some of this as well, because it's just fascinating where the private sector is really taking these big steps and being able to process all of this so much faster than I think sometimes the government has the capability to, at least right now. So hopefully there's
I think that there's a recognition of what this technology can do for every part of the economy. As we've been also talking with regulators in Europe, because we're expanding our anti-financial crime business into Europe, and we operate most of the markets in the Nordics today. So we're very engaged in the European ecosystem. Regulators are definitely looking to say, how can we solve these challenges more effectively? They're talking more about the very specific purpose for sharing data in a very contained way to solve criminal problems. They're also definitely looking at realizing that cloud really is the future. And so how are they, not only as agencies and as government, deploying cloud, but also enabling infrastructure like ours to be cloud deployed. So we're very encouraged that the governments are recognizing the power of these technologies. It takes time, though, to get these integrated and implemented and managed in the markets and in the world. So we have to recognize if we want to continue to bring our economies forward and match the power of all the other sectors, we have to be able to bring these technologies in as fast as we can.
That's fantastic. At this point, I mean, I think that is a fantastic point to end on, just because these are collective challenges, they need collective solutions, and I think that there's a lot of technology opportunities and innovations in this space. So thank you so much for all of your time today, and this has been a fantastic conversation. Before we end, I mean, are there any parting thoughts that you would like to share, after the end of this big week with IMF World
Well,
Bank?
I appreciate that. It's such a I have to say, hopefully it shows, I love my job because it's such a fascinating space. The markets are so dynamic, the economy is so dynamic, but at the end of the day, capital flows are global, the capital markets are global, and therefore working together and really driving global transformation of the markets and global transformation of the investor experience I think is something that is one of the most important things we can do as an economy and as a collective. So I'm really looking forward to engaging here, and I think it's been a great week of engagement to talk about those things. So thank you very much.
Of course, thank you. And thank you everyone for joining us.